here. As always, all information within these videos is not financial advice. It is merely for entertainment and educational purposes only. Ugh. It's been a very interesting week and a day. Um, Last week we were up 5% in the market. That was pretty nice. And this week, it's Monday, things are a little flat, but the portfolio went down a lot, like over 6%. That's to be expected when you're pretty heavy in a couple few stocks. If they have bad days, you're going to have a bad day. What's not to be expected is the rally to continue. We're not going to go up off crazy highs. We're probably in the middle of a dead cat bounce. That would be my guess. Um, Traditionally, after a Fed meeting, things go up and they start coming back to reality. We still have record inflation for the last 40 years. We still have stupid high gas prices. We still have a war in Ukraine. None of the macroeconomic factors have changed. We still have a Federal Reserve that's tightening 75 basis points this month, 75 basis points probably again in July. Nothing here screams that we're at the bottom. Nothing here screams that we're in a reversal. None of it. The only thing that basically makes me think that we might be close to a bottom is probably Jim Cramer expects it to go down. No, I'm kidding, but yeah, no, it's still a pretty bleak macroeconomic picture. And until those things change, I wouldn't expect a whole hell of a lot out of the stock market. I would expect it to get worse, and I'm not trying to panic or alarm you. I'm not selling anything. I would suggest you keep your positions as well. You sell things, you create taxable events. You can sell $3,000 worth of losses. Hell, you can sell $6,000 worth of losses and carry 3,000 over to next year. That's fine. Consolidate that money if you want. But how far things have fallen, how fast they fell. I mean, we're in month 7 now, just complete and utter, just ramming it down our throats of fall. The fact that I don't see a recovery coming anytime soon. No one can predict the market. But when this turns around, and it will turn, no one's going to see it coming. Not a single person. They're all going to say, well, it's about time. They'll retro, hindsight's 2020. Yeah, well, we should have seen it come. No, no one's going to see it coming, and it's going to come fast. It's going to come furious. And if you're not in the market when it happens, you are going to get left behind. So that's why I'm not selling. And I don't think a lot of people are going to sell. I think a lot of people are going to ride this down even further. I think there will be a lot of capitulation. A lot of people will sell. But I think those that just keep buying, dollar cost averaging as things go down, they will make so much money. You throw in $500 every paycheck. Can't do that. Throw in $100 every paycheck. You get on M1 Finance, just set up a pie. There's a link in the right here in the video to M1 Finance, and you can set up a pie of all the stocks that you love. Just throw $100 in every week. Just keep doing it. Every paycheck, $100, 200, whatever you can afford. And yeah, I think you'll be pleasantly surprised. And by the year 2024 or 2025, I think you'll be pleasantly surprised at how much it's grown into because of how low things are going. When it reverses, it's going to go fast, and I will be ready. And I hope you are too. Now, none of what I'm saying can be construed as financial advice. I'm not your financial advisor. You do not pay me to be a financial advisor. This is for educational and entertainment purposes only. So take everything I say with a grain of salt. Do what's right for you. Make sure you have enough money to live on. You should probably have 6 months worth of expenses because when the downturn comes and people start getting laid off, which is already starting to happen in the big tech firms, you're going to want to make sure that you have the money to live. I know it sucks because inflation's taking 8% of your hard earned dollars every year right now, currently. Year over year, 8.6. So I guess the question you want to ask yourself is if you buy a stock and it goes down 15, 20%, would you rather just left it in cash? It's only down 8%. Just a thought. You need to make sure you have the money to live on. Diversify. You can look in how to buy I bonds right now. It's a pretty good bet. That'll get you some money. You're going to have to leave any money you put into I bonds in for at least 15 months to get a year's worth of interest because they take 3 months worth of interest as a penalty if you take it out before 5 years. You can't take it out before the year's up. You have to have 1 year, but after that, you can take it out. I would suggest leaving it in for at least 15 months, up to the 5 years. It really depends on what inflation rates are. I mean, currently you're getting over 9.5% in interest for I bonds. So that's pretty good considering what inflation is. So might be something to look into. It's pretty much all I got. I am going to continue doing a separate series on YouTube of all the options trading, basically how to trade options, what options are, that kind of thing. I do already have all that information up in podcast form. Just look for Poor Verse Standard wherever you look for podcasts, you'll find it. But yeah, no, we're gonna do it on YouTube with visuals. It's gonna be a brand new series, and we'll record that right after we're done here, and we're gonna release that along with this one. And this is basically going to be how to buying calls and puts and what that means, and explaining kind of what that is. So thank you for listening. I hope you have a good week. Hope you had a good Monday, and I hope your week continues to be great. As always, trade well and be safe.